Coming to you from LoanSense here today, sitting in my comfy living room chair with my dog's favorite stuffed animal. Today we're going to talk about student loans and credit. So what is the impact on your credit after you take out student loans? Also, if you're going to grad school, currently don't have the best credit, what are the impacts of having not great credit on being able to take out student loans? So I'm going to answer these two questions. If this is content you like, please consider subscribing, liking this channel, as it will help other people that want the same information be able to find it. So I'm Catalina. I'm the co-founder of LoanSense. We are a digital student loan advisory, and we help people mostly who want to close on a home understand the impacts of their student loans on debt to income and help them and their loan officers be able to get them through underwriting. So an overview of how my expertise in this space came about. So let's first start with what is the impact of having student loans on your credit. First and foremost, student loans is a type of debt that it helps your credit actually to have a variety of forms of debt as long as you pay your student loans on time. If you don't pay your student loans on time or you become late or delinquent, that's when it has a negative impact on your credit, okay? If you pay them on time, the fact that you have student loans does not actually hurt your credit. So I just want to debunk that myth that having student loans means you're going to get bad credit or something, because even if you end up getting a $0 payment on an income-driven plan, and you pay less than your fully amortized amount, it does not mean you're going to get bad credit. As long as you pay what is due, it will not negatively impact your credit. So that's myth number one I want to bust. Myth number two is obviously not myth. It's not a myth number two. It's point number two I want to make. Sorry. If you continue to pay and make on-time payments for years on end, that's going to positively impact your credit. So I just want to say that as well. So for those of us who do that, if you can't pay for whatever reason, it's best to get on an income-driven plan rather than make a decision, I'm just not going to pay, or I'm going to go into forbearance or deferment, because that can hurt your credit. So you do want to check annualcreditreport.com annually to make sure your payments around your credit are accurately reported. That's another pro tip. So let's talk about what if you don't have such great credit, you're about to go to grad school. How does that impact your ability to take out student loans? Well, first and foremost, student loans are unlike any other credit product because it's mostly mandated and distributed and backed and guaranteed by the government, which means to get an educational loan, they don't look at your credit at all. That means that if you're going to go to a grad school program at an accredited university, that is not a non-accredited, or I would recommend actually staying away from not-for-profit universities. Are getting a really bad rap, especially with the borrower defense that's coming out with these various online for-profit schools that the government's now having to write off a bunch of people's student debt because the schools frankly just lied to them about what the program is and the outcome. So if you go to an accredited school, different schools, based on their students' payback, will get access to different types of loans. For example, subsidized, unsubsidized loans, all that is basically on the school's prior performance with the Department of Ed loans. So you're going to get access to a different pool of loan possibilities, and that's based on the school, not based on you as an individual. And based on that, you will be able to access, if you go to the accredited school, different types of loans given out by the Department of Ed to that institution, serviced by 11 different federal servicers, right? The most common ones right now being Fed Loan, Navient, Great Lakes, Nelnet. Those are some of the common servicers. So you won't find out your servicer until after you graduate, when you have to make payments, because the money's just dispersed by the Department of Ed. You will have to pay an origination fee for the debt. So an origination fee, and if it's unsubsidized, it's going to accumulate interest while you're in school. If it's subsidized, it will not accumulate interest while you're in school, and it will not accumulate interest until 6 months post-graduation. So you have about 6 months post-graduation to start paying your loans. If you have bad credit, it will not impact your ability to get federal loans. However, if you do need private loans for whatever reason, your credit will impact your ability to get private loans. And once you're done and out of grad school, having not such great credit will impact your ability to potentially refinance your student loans if that's something you're considering. We don't naturally recommend it to people because you lose all your federal protections, okay? So I just want to make that clear. So the fact that you have bad credit actually does not impact your ability to take out a federal loan whatsoever. It does impact your ability to take out private loans though. And of course, having bad credit does impact your ability to get other financial products and services after you graduate. So you should use the time while you're in grad school to actually think about how to improve your credit. That can include tips like reporting your rent. There's Credit My Rent. There's different apps that will actually credit your rent. Highly recommend that. There's also credit building products out there. This video isn't like sponsored, or we don't have any specific relationship. I actually think we have one with a company. I'll put a link below. It's a credit building credit card, or actually credit building debit card, I think. But the good old way to build your credit, from my perspective as someone who has an 820 credit score, is to just pay your bills on time and make sure you're getting an amount, if you have debt, an amount of debt that you can actually reasonably pay back. So if you have to take out a ton of student loan debt, then getting onto a plan where you can actually manage the payback is really, really important. And not getting into any type of debt that you are really going to struggle to pay back. Like, for example, I always use car loans because cars depreciate in value, right? So making sure you're not taking out debt that you can't manage to pay back. So that's because that's the worst credit hits, right? Is being late and delinquent on payments. Also, don't take out a bunch of, every time you go to a store, they offer you a credit card. Don't take those out. Don't find more ways to be tempted to put more things on credit. That's kind of my feedback, especially since when people go to school, student debt and credit card debt go hand in hand. So just be mindful of spending, of course, budgeting, all that helps. I hope this video really shed light on some of the myths behind student loans and credit. Let us know if you have any questions. If you have student loans, you're struggling to figure out what to do, you're in default or delinquency, whatever your situation is, we can help. We have different types of workshops daily to support you. Not just workshops, but we help you enroll your paperwork. Figure it out before May comes around, because May 1st, our student loans get kicked in less than 60 days. Can you believe that? So let us know if we can help. If you found this video helpful, please subscribe, please like, and please share with other people you think may find this information helpful. Have a great day.